audits has to, on a periodic basis, have what's called a peer review, meaning another audit organization comes and looks at how they go about doing their audits, really looking at kind of their internal controls over their audit shop, and do they have a good quality control system in place, and then often picking actually some audits that that organization has done, going through and making sure it looks like they're following quality control standards, like they're following the government auditing standards that they should be following. And so this was put in place to kind of to provide some independent assurance, I guess, that they are following their procedures. Because certainly we have requirements in Yellow Book that the audit organization themselves has to have a quality control process, and they should be monitoring themselves and how well they're doing. But there could certainly be a bias threat with that, right? And so you might not be as hard on yourself as you should be, or miss things just because you're so ingrained in it. And so having that third party come out and do that peer review is something we feel pretty strongly should be happening. This is another area where AICPA used to kind of handle the peer review program for most CPAs in the US. But once a lot of the scandal happened and Sarbanes-Oxley came into play, some of that went away and is now handled by PCAOB. So are folks familiar with the Public Company Accounting Oversight Board, who was established in Sarbanes-Oxley? And now for any audit organization who does audits of publicly listed companies, any of the big companies that are traded, or certain other organizations, you get to also have PCAOB come out and inspect your audit organization. So they kind of decided that for those big organizations where people are, can seriously be hurt by problems in those financial statements, they didn't want to rely on a peer review system. They wanted to have this organization come in and actually do the inspection. So we, as a CPA profession, we kind of lost some of our ability to self-regulate and now have an entity coming in and regulating us at least at the highest level. But for folks that are not getting inspected, peer review continues to be how we kind of self-regulate and monitor ourselves as a profession. So what we ended up doing, the main changes that we made in peer review, like I said, it is good if you ever are curious, it's not a bad idea to look at your auditor's peer review report just to see if they have any matters. Likely if they are doing your audit, they got a good peer review report. But there can always be, they could pass peer review but could still have items in there for their further development, right? Like it's not necessarily a problem, but it's things they could do even better. So they can be interesting to take a look at. But the main change that we made is recognizing that folks like some of the smaller size CPA firms still participate in the AICPA peer review program. Organizations like the Inspectors General participate in the SIGI peer review program, and we had not necessarily mentioned that in the Yellow Book before, that lots of organizations already have peer review organizations that they are associated with and that they follow. So that's the main change that we made in this area. Again, from your perspective, you will likely not notice any change based on how they're getting their peer reviews done, but it's an acknowledgement that lots of folks participate in these programs. On the other end of it, though, I will just point out there are some of these smaller audit organizations who are doing state and local government audits where they are not affiliated with any sort of AICPA, SIGI peer review program. So kind of like the CPE requirements where they don't have another reason to have it, they have to have a peer review just because of Yellow Book. We went ahead and took a look and decided, do we have the peer review requirements in Yellow Book as robust as we need them to be given some of these quality challenges we're seeing and how we want to try to improve quality. And what we realized in looking at the AICPA peer review program and the SIGI peer review program, that we didn't have some of the basic requirements that we would think a peer review program should have in our Yellow Book. For the larger organizations, that wasn't really a problem because they were required to follow SIGI, follow AICPA, so they were really already doing more than was in the Yellow Book, so that was okay. But those smaller entities who weren't following a program probably weren't doing as good a peer review as we thought they probably should have. So we added quite a few new requirements for folks who are not participating in a program to kind of bring them up to the level of folks that are participating in a program. So for, like I said, an audit organization who maybe hadn't been doing as a robust a program, they may be feeling a change in how they have to go about having their peer review done. Likely auditors you all are encountering won't be seeing a change, but some, like I said, the smaller ones could be. And this is, again, it's kind of interesting. We, like if you look at the peer review reports, there are different categories that the reporting could fall into. When we had issued the 2011 revision, we had made changes to peer review, but we got a lot of questions about the ratings and what type of rating should you get. So we had actually issued some an additional guidance, I guess, an addendum, if you will, to the Yellow Book that talks more about the ratings. For this revision, we have incorporated that addendum into the Yellow Book itself. So again, not too much of a change. Okay, 10 minutes. So any questions on peer review? No. Okay, very good. This area, I won't spend too much time in quality control. This is kind of what I was talking about, that there's peer review, but fundamentally, the audit organization themselves is supposed to have a system of quality control in place to make sure they are following standards. Again, we went through and looked at what do we have in there as specific requirements for them and found some places where we thought we could beef up our standards, again, with the eye of trying to improve quality audits. And so these are some of the areas where we added some additional requirements for the auditors, and then we added some additional requirements for how they need to be going about doing monitoring of their quality, and really with a focus on fixing problems. So when you do your monitoring and you find a problem, make sure you're acting on it. So in some ways that seems like common sense and would go without saying, but it's kind of funny, I've been hearing people say, the quote, if it goes without saying, say it twice. So along that line of thinking, we're now explicitly saying it. If you couldn't figure out that you had a problem and the next step would be fix it, we're going to leave nothing to the imagination and just say, go ahead and fix it. All right, so that's quality. The next thing I wanted to talk about was internal control, because hopefully lots of you have a big focus on internal control over financial reporting, if not internal control over the entire entity that you work in. And so, like I said, we spent a lot of time prior to 2014 updating our Green Book standards. And so when we did this new revision to the Yellow Book, we wanted to make sure we incorporated all of the good stuff from the new Green Book into the Yellow Book. For financial audits, if most of you are dealing with the financial audits, in that world, there has already been lots of guidance out there about how to think about internal control or financial reporting. So the AICPA auditing standards have lots of guidance. The OMB has put out lots of guidance on internal control or financial reporting. But what there hadn't been too much guidance on was thinking about internal control in a performance audit. So to the extent any of you deal with auditors on performance audits coming out to do their work, they now have some new requirements to really be thinking about internal control when they're doing their work. And are things that they're finding, if they're finding things not working well, is the underlying cause really internal control deficiencies? And so we're hopeful that folks, as they're out there doing these performance audits, will be incorporating things from the new Green Book and really thinking about what's the root cause of issues going on here. Are they internal control related? Because many times things that are not going well in a program at an entity are because of a lack of internal controls. And so we want auditors to be thinking in that way. So I won't spend too much time on that again. These are just some new requirements that we added for performance auditors to help them. The next area I'll talk about is fraud, waste, and abuse. In the government environment, we hear all the time about fraud, waste, and abuse. And so when I was thinking of Yellow Book, I was thinking, well, of course, the Yellow Book talked about fraud, waste, and abuse. But it didn't. It only talked about fraud and abuse. It had no definition of waste. We didn't talk about waste. So we're like, well, that seems silly. It seems like we should add waste, because I think people think auditors are looking for fraud, waste, and abuse. That's like a phrase that goes together. So in the exposure draft, we went ahead and added some requirements related to waste. Well, the feedback I got, I now understood why there was nothing in there about waste, because it's way too hard. Because it's just so subjective, right? And I may think a whole program is a waste, right? And so I could debate that all day, and I think, well, what a waste. But it's not necessarily, as we've figured out, a productive discussion for auditors to have. So I think I now understand why waste was never in there and why they never touched it. But so we kind of met in the middle. Waste is now in there, but it is not as something, it's not in there as something an auditor has to go out and look for and report on. So the way we talk about it, which I think is a really good place where we ended up, is to think about it in terms of internal control. That is something auditors are already out there doing. That is within our purview to be looking at an entity's internal control. And so if you see something that you think is waste as an auditor, or even as a financial management person, I mean, you could think about it this way too. If you see something where someone's spending, $1 million on a pen or something, you're like, oh my gosh, that's so wasteful. Well, are there controls in place that allowed that to happen? Did someone have to sign off and approve that? And then you can think about why are there controls in place that let that happen, as opposed to debating the merits of whether or not someone should have bought that pen or not. So I think where we ended up on waste is a good place. I think it makes sense. I think it's how we want auditors to be thinking about waste and abuse. And so now what we have done is we've actually made change in thinking about what we should do for waste, caused us to think about, well, what do we do for abuse? We have made them consistent. We want auditors to be thinking in both of those areas in terms of internal control. And I think as financial managers, you can think about it in that way too. If you are concerned about potential abuse or waste happening in your entity, thinking about what internal controls can be put in place to help ensure, I mean, nothing's 100%, but making sure someone doesn't have power to just willy-nilly do things without someone else giving some approval, I think is one thing we can think about. And these last two slides, I'm not going to spend time on at all. At the federal government level, these are really not too applicable. They're reviews of financial statements, which are rarely done, but they had not been covered in Yellow Book prior, and that came to our attention, and it was relevant to some local, smaller governments, so we did add that. And then management assertions is a hot topic under AICPA, but again, not too relevant here. The last thing I wanted to say was the effective date of when can you expect your auditors to be implementing these new standards. You can see here for financial audits, they're effective for periods ending on or after June 30, 2020. So for federal government, those will be the September 2020 fiscal years. So that's when, so not this 19, but in 2020 is when you can expect auditors to be implementing these. And then for performance audits, they're going to be starting any audits beginning after July of this year. They're going to be implementing the standards. You cannot really implement these standards, and the reason for that is, especially in the federal government or large governments where there's group audits and consolidation and type things, we wouldn't want one auditor to be using one set of standards and another auditor using a different one, and you have to bring them together. So we have said early implementation not permitted. Lastly, where to find us. If you do ever have questions about what your auditors are doing, how are they following the standards, what should they be doing, we have an email and a phone number for technical assistance where you can always reach out to us. Someone will get back to you within 24 hours, I promise. It might be that we got your question and we have to look into it if it's a really hard question, but we will acknowledge that we received it. So please feel free to reach out. The Yellow Book is free on our website to download. If you want to buy a fancy one, you can do that through GPO. I think they're actually kind of expensive though, so download PDF I think works just as well. So any final questions? No? Okay, well thanks so much. I appreciate your attendance and interest in the Yellow Book.
Thank you so much.